The fact that there's so many countries in similar situations, even if it's of different magnitude, that we don't know which domino is going to fall first, right? And so it almost doesn't matter which domino is going to fall first because we're all sort of in such similar situations overall.
Things need to really, really break. It needs to be really bad for the populace in whatever country, in Britain or France, as you say, we only need one and it's going to be a domino effect.
If Japan starts to experience some sort of fiscal crisis, one of the measures that they'll take is to say, right, we need to bring all of this money back to Japan to try and deal with this debt crisis. We need to just, start selling foreign investments that we've held for long periods of time.
Hello and welcome to the Money Magpie Invest Podcast. I'm Jasmine Birtles, the founder of MoneyMagpie.com. And before we start, I must remind you to like, subscribe, very important to do that. Comment, I always have a look at your comments and I do reply. And tell all your friends how fabulous it is, because it is. And today it's particularly fabulous because I have my friend Nick Hubble, who is the editor of the Fleet Street Letter, which is produced by South Bank Investments. And he's joining me from Japan. Hello, Nick.
Hello, Jasmine. Good to be back again.
Thanks for coming along, because I asked you to come on because it looks like it's all kicking off in Japan at the moment. And firstly, I wanted to know why does that matter to us in the UK? Because it does, doesn't it?
Yeah, Japan's one of the biggest investors in the world when it comes to foreign direct investment, but also portfolio investment. So buying FTSE 100 shares, government bonds, UK government bonds, all sorts of assets. I'm sure people have noticed, the Nissan factories and all these other sorts of influences that Japanese companies and investors have. So if there's a problem in Japan, there's a chance that all of these investors will be pulling out, will be panicking, will be leaving, will be reducing their investment in the UK and selling the assets that they do hold. So especially for a government that's struggling to find lenders for its latest budget, if the Japanese start to get worried about their own state of affairs, which is actually kind of similar, then you can imagine that the UK government might be impacted as well.
So you're saying that they've got a similar situation to us. What is the situation in Japan and what's happening to it? What is the government doing that's making us go, good grief, that's a bit scary?
So for a very, very, very long time now, they've been borrowing far more than they should be, I suppose. They've been spending too much and taxing too little. And over time, this has led to the government debt becoming an extremely large burden, so large, in fact, that economists are a bit mystified that it's even possible at all. And part of the story has been that the central bank, the Bank of Japan, has been buying government debt, huge amounts of government debt. It's a bit like the QE story with the Bank of England, right? So as a result of this, Japan's sort of like an experiment of where the UK is going, where we're going to end up if we continue along the path that we're going on. And for a very long time, people have said, well, we might be in trouble in the UK, but if Japan can do it, if Japan can continue to borrow and spend as much as it has, then maybe things won't go so badly wrong in the UK as soon as some of the doom mongers suggest. So if things start to go badly wrong in Japan, then all of a sudden this excuse that we can borrow, absurd amounts of money starts to look a bit questionable. So it's sort of a message from our future, a warning from why we shouldn't be going the path that we're going, why it's a bad idea, assuming that things do start to actually go wrong. Earlier this year, they did start to go wrong. It actually happened around about the same time as things started to go wrong in France, where the government bond market started to wobble. The cost of government borrowing, the interest rate the government pays to borrow, started to go up very quickly, and the value of the yen crashed. And this is one of the reasons why I live in Japan, because each time the yen goes down, my British pound income becomes worth more here, so I'm able to spend more. So it's great news for me, and I'm anticipating that to continue. So this sort of process of having too much debt is starting to now unfold in much the same way that it did, after the mini budget with Liz Truss, and I guess with the Greek crisis and the Italian crisis in 2018, and all these sovereign debt crises that we've had, Argentina and places like that. It's finally reaching Japan, the one place that has been an outlier where for years everyone's been saying it's going to happen. it's finally starting. We had a bit of a quiet period over the last few months because the government changed, Prime Minister changed, and now this crisis is back.
Because when you say crisis, I mean, as you say, it seems to have been on the edge of a crisis for a few years now. I mean, I'm one of those who goes, how have they managed to defy gravity to the point where they have? I mean, in Britain, we have a bad, as you say, a bad debt problem. We have 100% debt to GDP level, depending on how you calculate it. In Japan, it has the highest of anywhere in the world, 260%. 260%. I mean, each time I say it, I think that's not possible, but it has been. And I mean, my understanding is that it has been because it's been very largely Japanese people who've been the lenders to the state. Is that the case, or is it other things that have kept it going?
That's one of the factors. So if we compare Japan and say Greece, Portugal, Italy, and Spain, those countries cannot print their own money, right? They rely on the European Central Bank, which acts for all of Europe, whereas the Bank of England can buy the UK government's debt, and the Bank of Japan can buy the Japanese government debt. So the risk of a default, of not being able to pay back the money, is extremely low, because in the end, the central bank is going to print the money that's needed for the government. It would prefer to print money than have a government default on its hands. So there isn't that risk. Also, we've got our own currency. So instead of having a sovereign crisis, we're probably going to have a currency crisis. The value of our pound or of the yen on international markets is going to fall. So there's sort of safety valves, although they're not very pleasant safety valves, that can sort of blow and whistle and hiss away before things go dreadfully wrong. And that's why this crisis has been playing out mostly in the currency markets for Japan. The yen's basically crashed over the last few years against most major currencies, which, as I say, has been really good news for me here. And living in Japan's absurdly cheap now because of that yen crash. So that's part of the issue. The other part that people need to consider, which is often ignored, is that governments own a lot of assets and countries own a lot of assets. So there's lots of Greek islands that were sold during Greece's sovereign debt crisis to private owners. There's lots of mining land in America that can be permitted and leased to mining resources companies in order to raise revenue. So it's not just how much a government owes, it's also what it owns and whether it can sell that. And Japanese investors, like I mentioned earlier, they've accumulated vast amounts of assets overseas. They have major investors in all sorts of different things around the world, and they have lots of assets in Japan as well. So before a fiscal crisis is going to hit in Japan, Japanese investors and the Japanese government are going to start selling assets that they hold. They're going to start selling things. And this is why it matters so much to us all around the world in financial markets and investing markets, is because if Japan starts to experience some sort of fiscal crisis, one of the measures that they'll take is to say, right, we need to bring all of this money back to Japan to try and deal with this debt crisis. We need to just, start selling foreign investments that we've held for long periods of time in order to bring that money back to Japan, to try and pay more taxes or invest more in Japanese government bonds to support the Japanese government. And so investors all around the world have very long been worried that at some point Japanese investors will do that. And the fact that the Japanese government bond yields are blowing out, so their cost of borrowing is going up, the fact that the yen is crashing makes all this a lot more likely. It's sort of similar to what happened to Cyprus and Greece during their sovereign debt crises, where suddenly they needed to control whether money was flowing in or out of their economy in order to stabilize things. Well, the Japanese at some point are going to need to start selling foreign assets in order to try and stabilize their own currency and their own government bond market. And that's what makes this such a big problem for everyone else, because a lot of governments around the world rely on Japanese investors lending them money.
Hi, I'm going to quickly interrupt this amazing podcast to let you know that Money Magpie Invest has a bi-weekly newsletter where we share tips, tricks and insights to help you become a more confident investor. Our newsletter is completely free to sign up to, and it will arrive in your inbox on Saturdays at 12:30 p.m. As well as all of the super useful investing information, we also share exclusive deals from our partners. So if you're serious about building long-term wealth for yourself, I really recommend signing up. And you can find the link in the description of this podcast.
Well, exactly. And we are very much one of them. We've recently had a budget which has managed to calm the bond markets for the moment, but I see that as a short-term thing. And I can imagine that if you've got Britain looking a little bit shaky and then Japanese investors looking to sell, British bonds would be one of the first to go.
Yeah, that's right. And that's already started to happen to some extent, where they've reduced their allocations. The other issue is, as we saw from the Liz Truss story, who is the leader can matter a lot. And what's happened over the last few weeks and months now is that Japan's got itself a new prime minister who is significantly different to the previous one, even though they're from the same political party. And the new prime minister is sort of selling herself as a Margaret Thatcher type prime minister. She idolizes Margaret Thatcher and the Iron Lady and all that sort of mystique and persona of the first female prime minister. The problem is that her policies are exactly the opposite to Margaret Thatcher's, despite the fact that they faced, again, kind of similar environments with too much government debt, rising inflation, if of a different magnitude. So the response from the Japanese government right now is exactly what not to do. It's more like a Rachel Reeves or a Harold Macmillan or Callaghan before he sort of figured out what was the truth. So this recent shift in who is leading Japan has suddenly made things dramatically worse rather than better. And so the risk is further rising. And Japanese people, they haven't had that sort of Margaret Thatcher history moment where they've come to realize what the correct policy is. If the center-right party, which is governing Japan and has for a very long time, is not pursuing the sensible economic policy, there's not really anyone else who will. So there's a lot of fear now that they've got precisely the wrong person with the wrong policies at the wrong time. And so foreign investors are getting a lot more worried.
Understandably. And I often get comments on reels and whatever that I do saying we've got to make cuts, we've got to get sensible about the way that we're working. And people say, oh, well, it doesn't matter. You can, as you've mentioned, we can just print more money. The government can just print more money. Well, yes, it can. But that's going to cause inflation. It's going to devalue the currency, which is what has been happening, as you say. It's certainly been happening very much with the yen. And it's not the answer. Japan has a huge problem, as does the whole of the West, in its aging population. Do you think there's any chance that they will make some of the cuts that they need to do when they have such a large number of older people who are not working and living essentially off the few that are?
It's a peculiar situation because I can see both sides of this one in the extreme. So on the one hand, if anyone can pull it off, Japan can, because they have a very sort of coherent, cohesive society, homogenous society. So there's a famous quote, I can't remember the exact words, but Japanese people will accept suffering if they're sure that everyone's in the same boat, right? If they think everyone's sort of pulling their weight and everyone's struggling together. So on the one hand, you'd think Japan of all places, and I can attest to a lot of this, that they'll manage to do it. On the other hand, they're in a worse situation than just about anyone when it comes to demographics and government debt, the amount of money that would have to be printed, and so on and so forth. So it's going to be a fascinating test case. And the fact that there's so many countries in similar situations, even if it's of different magnitude, that we don't know which domino is going to fall first, right? And so it almost doesn't matter which domino is going to fall first because we're all sort of in such similar situations overall. The question is, which countries wake up to what is the correct policy in response to this? So that's happened in Argentina. It's happened many times throughout history where, once you've experienced what money printing causes, then you wake up to what's required. You eventually get your Thatcher, you eventually get your Javier Milei in Argentina, you eventually get your Ludwig Erhard. It's just a question of how bad things need to get. And what I don't know about Japan is who that person is and what that looks like. A lot of countries around the world have a history of, they can point back to say, well, we just need to do what Thatcher did, or we just need to do what so-and-so did. And I don't think Japan has that in the same way. So I don't know where the reckonings or the awakening comes from in Japan. Other countries might figure it out first. Things might get very bad in Japan. But it's obvious what needs to be done. I think it was Jean-Claude Juncker, the former European Commission president. He said, we all know what needs to be done. We just don't know how to get elected after doing it. And so,
Yes.
and that was facing very similar problems.
I mean,
Just
you
within the Eurozone.
mentioned countries sort of seeing what the light, and not doing it again. But of course, you're part German, and Germany had the Weimar Republic, and that wasn't that long ago. And yet now it's taken the foot off the brakes when it comes to borrowing. I mean, Germany was doing really well until, what was it, this year? Was that they said, oh, we're just going to borrow until we feel like stopping.
Yeah, that's right. And so that's the ultimate irony. And again, it's the center-right party that's doing it. So
Right.
I don't, and you have to ask a politician why they can't figure out, or they can't get the obvious through. And yeah, there's so many intellectual heroes, economists, politicians, policymakers, civil servants, who have solved these problems before. Admittedly, they're far worse now. Admittedly, demographics makes it more difficult. Admittedly, the government's far bigger, so there's more dependence, and so on and so forth. But we do know what needs to be done. The fact that the OBR and the likes, their equivalents around the world have the opposite economic ideology doesn't change the fact that we've done this so many times before. The question is just how bad it needs to get before we wake up again, once again. And I just quickly want to mention the story of the German who actually ended the hyperinflation and so, and also after World War II, a German sort of figured out that it was that the government involvement and the regulation, the restrictions that was causing the problem. So in both cases, they figured out that what needs to happen is for the government to step back and public spending to be cut. Civil servants' wages need to be frozen instead of taxes being frozen, tax thresholds. So all of this has been figured out. There's these fantastic stories that really ring true for people, and these fantastic anecdotes all throughout history of what the correct policy is. It's all there. The fact that it's not being spoken about at the highest level of politics in any country, except perhaps Argentina right now, is just, hopefully it's just a matter of time. People can decide for themselves how bad they want things to get.
As you say, it's politicians can't, even those that know what they should be doing. I mean, even Keir Starmer and Rachel Reeves, I suspect, have a decent idea of what should be done, but they're held back by their politics, and particularly by their backbenchers who are economically illiterate, in my view. So it seems to me, and I've said this for a while, that things need to really break. It needs to be really bad for the populace in whatever country, in Britain or France, as you say, we only need one, and it's going to be a domino effect, to go, oh, right, there really genuinely isn't any money left. We can't just print some more because we'll have a Weimar Republic situation. We are actually going to finally have to make some cuts. Is that the situation, do you think?
Yeah, and there's lots of triggers that suggest different points in the next few years when that will start to matter. So, for example, in America, which we haven't spoken about yet, the Social Security Trust Fund will eventually run out. And at that point, taxes must pay. And that is a very sudden shift where before the government was just selling assets to pay for Social Security, but all of a sudden that whole bill is going to show up on the government's budget. So that's going to be a massive shock to the system. And there's lots of examples all around the world of similar sort of turning points or flashpoints where something really could change. And then you've got these slow crashes in currencies like the yen as well. So at the moment, part of what's going on is that it's as long as every country's in trouble together, there's nowhere to flee to. So the crash is unlikely to happen because everyone's pursuing the wrong policies and in the bad situation together. But I think that's not always going to last forever. And eventually, people will eventually be willing to elect someone like Javier Milei, which was considered, I would have considered impossible. Even when it happened, I thought it was impossible that someone would elect someone with those policies. So, I've been so wrong about so many turning points similar to that. I was wrong about Brexit. I was wrong about Javier Milei. So it seems to me that maybe political change just somehow magically happens about these turning points in history.
It seems to me that the Eastern Bloc, Eastern Europe, is getting their act together in a way that the Western countries aren't. Maybe that is going to be something that Western countries finally look to and go, oh, golly, these people that we've always looked down on because they were communists and, useless, they're actually beating us. Poland, for example, seems to be doing extraordinarily well.
Yeah, once you have momentum and with good policies, then it sort of persists for quite a long time in its way. It's a lot easier to catch up and to mimic success than it is to sort of turn the boat around. A lot of these countries, which I traveled around in 2016, they joined the EU and the Euro because their own policymakers were even worse. So I would spend time trying to explain to these people in Eastern Europe why the Euro is a bad idea for them, and why the EU is a bad idea for them. And they would say, yes, but things are even worse, if we're left to our own devices. And that's sort of like you're suggesting, that's no longer as true anymore. Maybe the next exit after Brexit is actually a country that says, we can govern ourselves better, rather than, a situation where it's a battle about the EU or a battle about the monetary policy of the ECB. It's an ideological one instead, where countries realize that, the superior policymakers led their own countries into a blind alley, and we want to pursue the opposite.
So finally, we've said that what's happening in Japan is potentially going to harm the UK, or certainly affect it. Do you see any indications of that happening already? Are you seeing selling of assets? I know they're thinking about it, but are we seeing the start of it yet?
No, and I think there'll be quite clear announcements from the Japanese government as that begins. So it's called capital controls. It's when the government starts to control the flows of money from across borders. And the UK had this, I think it was in the 70s. There was a limited amount of money you could take out of the country and that sort of thing. So I think the Japanese government will make overt announcements once it's established that there's a problem because, say, the yen is crashing, where it will request that its pension funds and things like that start to invest more in Japanese government bonds, which means repatriating capital from overseas. So I think that will be quite overt and open. It's possible the financial markets will price that in before it happens, but I think we do need the crash that's happened so far in Japan to accelerate quite significantly. There's been so many false beginnings for a Japanese financial crisis or crash. It's known as the widowmaker trade because so many people have bet on it over the years and gone broke because it never seems to actually happen. So I think when it does go, it's going to be quite a big publicity circus. And I think investors should wait for that to begin. Right now, the risk is unusually high because the Japanese government bond yields have been surging and the yen has been falling again. It's going to be like Greece and Italy and all those countries back in after the 2008 crisis, where it was a very prolonged, slow, chaotic series of crises over and over again. Just the Japanese investors own so many assets that it's everyone else that will be left high and dry as those assets come back to Japan.
So it could, I don't know the percentage of UK gilts that are owned by Japanese holders, but if it's significant, it could have a really marked effect on the bond yields in this country.
Yeah. So 30% of UK government bonds are owned by foreigners.
Right.
And we don't know what percent of those are owned by Japanese investors. The problem is that all these are can be very indirect holdings, so they can be held by tax havens and things like that. They can be held by financial institutions inside the UK technically, but owned and directed and controlled by Japan. So the figures and the stats don't work so well. It's more that once people know that Japan will no longer be investing heavily in the UK economy and will no longer be heavily investing in the UK government bond market for the long term, everyone else will start to get nervous. So it's the fire in the theatre story.
Yeah, excellent. Well, I just said excellent. I don't mean excellent. I mean excellent analysis from you, Nick. Thank you so much. This has been Nick Hubble, who is the editor of the Fleet Street Letter, produced by South Bank Investments, living in Japan, talking about Japan and looking at the effect that Japan's, I was going to say crisis, ongoing crisis, is potentially going to have on the UK markets. Thank you so much, Nick. I'm going to get you back again later on when things move a bit more forward to see really what's happening in the UK because of Japan. It'll be very interesting to see. Thank you so much for joining the podcast. This has been the Money Magpie Invest Podcast. I'm Jasmine Birtles. Like, subscribe, comment. I always look at your comments and I do reply back, and tell all your friends because you know you want to. and see you next week.